So the whole concept of the ICO that you guys are hearing a lot about, there's lots of companies that have raised lots of money. Some of them have gone bust. Some of them have taken the money and run. Most of them are around. A couple of them are going under enforcement actions by the SEC, and the SEC is starting to clamp down. SEC, for those of you who don't know the term, is Securities and Exchange Commission that regulates the sale of securities in the United States. And the SEC is involved no matter where you are going to be um, actually doing the initial sale of the securities, whether it's outside the United States or not, because at some point the sale will happen in the United States. So you will be involved with the SEC regardless of whether you're going to be pushing the button from from Gibraltar or from Cayman or from Luxembourg. But just a quick primer about it. The way, and I wanted to commend you guys for the presentations you did. It was fantastic. The video was incredible. Um, I wish you had kept the $25 worth of tokens. It would have given you a few more dollars, but you, you've made that 100 times over with the expertise you've garnered. Um, it's as Andy was saying, that the Bitcoin can be used for a utility, right, Andy? And and that's where a lot of the activity is happening right now. Is that utility is being given the primary kind of a focus, and the question of whether or not that empowering the utility to occur, whether that is a sale of securities, which then implicates the Securities and Exchange Commission, or whether it's a sale of a commodity, which implicates the Commodities Future Trade FCFTC, shortening the words, or whether it's a money transmission of some sort. So those are the three areas of regulation that you have to do the analysis on. For those of you who don't know, we're the premier firm on ICOs. We've done lots and lots of them. And we have about 40 lawyers in our practice that focus on cryptocurrency and blockchain. But just a quick short primer on the legal, because I think the business side is much more important in the discussion today, is it's really two different phases, the ICO. One is a pre-sale, and one is the actual sale of tokens. And the pre-sale is where you raise some money with an allocation of tokens to the investors on a discounted basis, right? And you raise money just like you're raising money for your corporations filing, on a convertible note or on, what's called a safe document. But it's just a simple sale of securities. It's regulated under Regulation D, and it requires, or it has as a kicker, the token allocation. Then after that's done, you go and start building your utility that you are planning to converge into something of real value, and then it will take time for you to develop that utility application. It's technologically driven, it's hardcore, it's not easy, and it requires, prior to your doing all this, a white paper that is drafted carefully that plans out what the utility is going to be. That takes at least 12 months, I think it's frankly more, to develop. And once that's done, then you go into the next phase, which is the sale of the tokens, which is then you have to draft the terms of use, the policies about the use. You go out and make sure you test out all the application, make sure it works, and at that time you start negotiating with investors on a public offering of the tokens. And then the last version of, or the point about this, is that the sale of tokens is considered to be it's not a sale of securities. That's how you want to coin it. Otherwise, you'd be subject to Securities Exchange Commission rules, right? So it's a service. And because it's a service, you'll be taxed on it if it's being done in the United States. So typically, you would have this outside the United States, the actual service to be provided outside the United States, or going live would be outside the United States, so that you don't have the taxation from the cash that you're raising, right? So you typically go to Cayman Islands or some other jurisdictions, but mostly Cayman Islands. And that's where you conduct the actual, the service of issuing the token on a public offering basis, and to save taxes. And then over time, you draw in the money back to the US, And once you do that on an incremental basis, you pay taxes on it, as opposed to on a wholesale basis, suddenly be subject to a significant tax. So that's a little bit of a primer about this. But I think we can move on that basis to your questions so that you can cover all the business stuff, and I'm happy to moderate and help in the discussion.
Thank you, Arman. Just always want to throw it back to the audience. Who has been involved in an initial coin offering? Okay, one up here. Okay, so very few. Okay, great. So thank you for giving us that insight. I'm kind of curious, going back to the different, difference between private and public blockchains, because you were very focused, Arman, on, ICOs, right? But what is the difference, if you can elaborate a little bit more on these two types of blockchains, and how, and which one is more applicable to kind of the healthcare field and what you have been working on today?
So again, people use these terms in different ways, so I'll just define what I mean by each of them. So often a private blockchain, in this case, I'll define it as contained to a single entity and like a single company. And then that company would use a blockchain to track like an audit trail over time. I'm biased and would like maybe other panelists to talk about it. That is, I don't think, a great use case for a blockchain, which is why we don't really have them. It's a database that's just like maybe distributed within the company. Then you might have a permission blockchain where you'll have multiple parties who engage, like maybe you'll have a couple pharma companies, hospitals, and whatnot. In those types of blockchains, you have to determine what is network consensus and how you decide how to agree that this is a transaction that you agree with. For those types of blockchains, again, my opinion is if you trust all of the parties in that system, you probably don't need a blockchain again. You probably want something where there's some level of untrustworthy actors. But that's kind of in the middle, and I do think those are probably the most applicable to healthcare. And then public blockchains are ones where anyone can download the ledger. It's things like Ethereum, Bitcoin. It's a little bit funny with ICOs because I guess, can you ICO on a permissioned chain?
You could do a token sale for a private or permissioned like application or a private or permissioned network, but it's still like an Ethereum, an ERC20. The token itself would be secured by Ethereum.
Would you agree with how I described it, or would you describe it differently?
Yeah, no, I would agree with that. I think in healthcare, first of all, like a private blockchain is like being an internet of one. I think about like when the internet first started, people did create intranets that were like these private internet networks that would, connect a bunch of different applications. I actually do think that we'll see private blockchain development happening along this similar lines. That's what Change Healthcare's blockchain solution is. It's a private one. But even Change Healthcare being, a well-established legacy IT company, we're not stopping there. That's like the first stepping stone. So I think hybrid or permissioned is the word that Andy used, is a good way to think about it. And I will differentiate this by one thing, which is there's a difference between being a user of an application on this network and being a validator on this network. And that's usually where the line is kind of drawn. And so what I think will happen in healthcare is there will be some sort of production network in which running a node, validating the transactions on that network is controlled by a golden circle of companies. But being a participant on the network or even creating an application that connects to the network and pipes in data from it, that would be a relatively dynamic experience. And so I think Ripple is a company that kind of has a model like this. And there will be others like that, but that's kind of the model I see taking flight in healthcare before we have a truly permissionless model, which I do think is a future. So.
Mm-hmm. Yeah, I mean, I would agree with what both of you said, and I think if we look at some of the most compelling potential use cases in healthcare, we are talking about situations where there are either non-trusted parties or there's the risk of intrusion with data from non-trusted parties. So the supply chain kinds of things, like for counterfeiting, there are a couple of pilot projects like that in the works, all of the contracting and transaction stuff, the things that you're doing with claims data, Change as well as like most of those examples that you put up there. I think we can all envision, as you were talking about, like the need for data integrity in healthcare and how important that is, that you don't necessarily want to have everything be completely public in all of these situations, but when you have those non-trusted parties, that's why the permissioned solution kind of really makes sense.
My thing is, getting healthcare organizations to modernize their technology stack is a difficult process. It's taken over 20 years for the widespread adoption of EHR technologies. So do you think the adoption of a blockchain in healthcare will be different, and if so, why?
I don't know if it's going to be any different. It's going to be an arduous task, and I think it's going to take a long time. There's a lot of these, stop and goes that are going to happen down the line. But I do think that, Epic and EHR, all these things are going to go through a complete, revamping. And I think the blockchain and ICOs, excuse me, not the ICOs, but the blockchain really has the ability to actually do this. And there are companies that are really focusing on this. And I think it is going to be in our generation. It will happen where there will be a change. Maybe McKesson will be the one that will take it on. But I'm hopeful. I think it needs to change.
Yeah, I mean, my perspective on this is that I think, if you look at EHR, what does that take? It takes really large implementations at scale in provider organizations and training a ton of physicians and nurses and clinical professionals to like play in that space and do a behavior change, which is always a challenge, right? You can implement some blockchain-based solutions kind of on the back end where you might not have to change the mind of any provider or get them to do anything differently. And there could be things that are as easy as like flipping, not that easy, but it's like flipping a switch from someone sitting in like the financial office of a pharmaceutical company, not necessarily something that has to roll out at scale to large provider organizations. So from that regard, we might see faster implementation of certain blockchain-based solutions. I think in the life sciences space, I think those will be the first things to happen. Will maybe be less on the clinical data side or EHR side and maybe be more in the business solutions. So things around transactions, contracting, claims management, price reporting, et cetera, that are like really onerous tasks right now from the biotech and pharma perspective, and they might be able to speed them up and do it with like a better auditable trail, as we've talked about. So I don't know, any people here have like an interest in fraud prevention in healthcare, for example? Yeah, I mean, some people are nodding, maybe not a ton, but I mean, everybody, it's like hundreds of millions of dollars a year, right? Anybody know what like 340B price reporting and like Medicaid best price reporting are? I mean, some of those areas are really, I think, primed for a different technological approach. And I don't know, in my opinion, this is probably the best thing out there for that.
I mean, I don't know. I come from the perspective of spending 4 years in the blockchain industry, and I have seen everything. I mean, everything that it's shown us so far anyway, which is a lot. But I would say that in healthcare, we've been typically pretty slow to adopt new technology, and I think a lot of the reason behind that is because someone told us we had to adopt it, right? Like, you have to take your records digital, and this is how you have to do it. And I think that the interesting opportunity that blockchain technology presents, it's very unique from what we've had before. I mean, different from cloud, different from mobile, different from email, is that blockchain networks have this incentive structure in the form of an application built into them. You can have tokens that directly incentivize people for behaving however you want them to. And so if for example, how can you incentivize people to adopt better cybersecurity practices? How can you incentivize people not to click on links in an email that's clearly a phishing attack? Maybe if you like paid them 1 cent every time they did something smart, they would do that more often. And so blockchain is an effective accounting mechanism for keeping track of behaviors and rewarding them directly. And I think that will present new ways for technology to be adopted. And at least that's a potential. And then if that is never developed, I still think that blockchain technology will get adopted more similar to how you put it, where it's kind of on the back end, and slowly but surely people are going to be using it without realizing it. I think the bigger question around getting people to participate is more if the business is all about keeping your data private and keeping your secret secret, how can you incentivize people to change the way they behave? But that's more, I think, of an application level dynamic to be figured out, where if the underlying network has replaced trust with math, then finding an application that people can agree on shouldn't be too hard.
I have a quick last thought. So I think this is going to move faster than we think. I think blockchains probably will just be one piece of the pie, like it's going to be part of the stack. Most of us probably won't even realize we're interacting with them. Most likely cryptography around like secure communication is going to be more important for us than some of the blockchain components. And then I don't think tensions are bad. Like move fast and break things in healthcare means people die. So like maybe it's good that we're in an industry that's thinking about that sort of stuff. Like generally I think that what we have right now with Twitter and Facebook doesn't create my best self. And I hope that the technologies that we build for healthcare really help us build our best selves, and we build the right sort of incentive system for that.
Yeah, I guess. Sorry about the one mic here. So data incompatibility and fragmentation of the technology landscape has limited the ability of health organizations to collaborate and fully implement population healthcare, right? Big issue. Is this a problem blockchain technology can solve? And if so, what are your thoughts?
I mean, I guess I am closest to you, so I get to go first. Yeah, I mean, I think we already heard, like, we're not going to put everybody's genome and everybody's health record and everything on, like, the Bitcoin blockchain and then go from there, because it just doesn't, it's a ton of data. It doesn't make sense to do that. I mean, I think incrementally, might this gain us some better interoperability? Yeah, maybe. I'll what do you guys think?
Yeah, I mean, my opinion on that is that blockchains are just like a utility. Like they're just like a utility network. So say we had one big healthcare blockchain out there that was optimized for data exchange. You know, it's just like a playground. Like the games you play in the playground are kind of up to you and your group of friends. And so I think that in healthcare we have natural segmentation and natural fragmentation because healthcare services are provided by people who are like located geographically in one place. And so your healthcare network is kind of restricted by your geography. And so I think that you have little ecosystems, like you have the big US healthcare ecosystem, you have the global human healthcare of the world, and it's broken up into really small ecosystems. And I think blockchain technology provides a flexible utility that those ecosystems can use, and without having to come into contact with each other, or they can come into contact with each other with less friction than they're used to now. So I think it'll end up being, it'll augment the fragmenting, but I don't think that it's gonna homogenize it at all. I think it'll actually create a massive amount of diversity in applications.
I don't think blockchains are going to help us with data interoperability. That's mostly going to come from people agreeing on protocols and like how data just interacts, which is frankly why EHRs don't work right now, because we can't agree on that stuff. If you go home and look up one thing, there's some really neat things happening in cryptography, and a lot of blockchain tech is based on cryptography. So look up homomorphic encryption, and what this is when you can secure the underlying data, never disclose individual data, and have and develop algorithms on top of that. So what this effectively allows you to do is train AI and algorithmic models without disclosing underlying data, and that's going to be really exciting because then we don't have to put individuals at risk, and I think that will help a lot with interoperability more so than blockchains.
Do you see any other technology working in conjunction with the blockchains to make it more efficient? You mentioned AI. Is there anything else?
Yeah, and so when I say, so there's a really funny tweet where it's like, what's the difference between AI and machine learning? It's AI when you're pitching to investors, and machine learning when you're hiring engineers, and like it's algorithms for everybody else. So we have a lot of data. We need to figure out what to do with that data. We have to clean that data, and like we have to make sure that data is like tracked and stored. I loved your 4 things. I want to like sear that into my brain. So like all of these things are kind of pieces of the puzzle. So I think we're going to have algorithms, we're going to have blockchains, we got to figure out how to do the data. I mean, the biggest thing is like we're still humans, right? Like we're not, math problems are easy for us. Figuring out how we do system upgrades and handle governance, that's what's really hard. I mean, that's where a lot of the blockchain systems are struggling right now. Like what if you fork and you don't agree on the governance system? Like there's still a lot of questions that I think that's like probably where we'll be spending a lot more time. So I guess to answer directly, we'll probably have AI, blockchains, federated learning is going to be a part of it, a lot of advances in cryptography, and like we got to figure out how to get all these things to work together.
And I would just add to that when you're talking about blockchain networks, we're talking super, super, super low level protocols, like the back end of the internet. Like who even knows how that works? And we don't. We just use the internet. And so I think that blockchain, a lot of the technology that we are working with is at the integration layer. Is how are we integrating this type of network into apps and services we use today? And then over time, that might fundamentally change what we want from those apps. But initially, integration work I think is going to be really important to getting adoption.
So Jennifer, you work with a number of large pharma and healthcare organizations to educate and ultimately build on blockchains. What do you think are the biggest hurdles for them utilizing this technology? I'm sure you have some insight there.
All right, so it's great, right? Because I go in to talk to like pretty senior level execs at pharma and biotech companies, and they all want to do innovative contracting. They want to do risk sharing with insurance companies, all this like really clever stuff. And then they say, well, the way we're doing it now doesn't work. And we say, well, great, we have this other way to do it, and it uses this thing called the blockchain. And they're like, yeah, so I saw something about Bitcoin on the news, but like, what is this? And so, they give you, like 30 minutes or 60 minutes to talk to them, and you're like, okay, well, we've got a lot of education to happen here. So what I would like to encourage all of you here in this room, and Emily put this really well, you're all like a step ahead, right? Because you're here. And so, please go back and help educate and tell other people in your companies what's going on. But my bigger thought on that is like, look, there's going to be some pharma company, whether it's, Genentech is doing pilots in the blockchain space. There are other companies doing stuff. I talked to a lot of these big players. There's going to be some company that like gets their blockchain strategy together faster, and it's going to happen in the next 6 to 12 months. So if you're from a big pharma or even a smaller like biotech company, and you're not like someone at your company is not putting together a strategy here, like get on that, because it's going to happen. And I think it's going to be a big competitive differentiator if you can figure out how to do these things more efficiently or more lucratively than your competition. But yeah, the educational hurdles are huge, because I think people get what they see on the news about, Bitcoin, and they read some stuff on the internet, and that's not, what we're talking about in 90% of the times when we're talking about building specific applications for the healthcare industry on the blockchain.
Yeah, I completely agree with everything you said. I've provided a lot of enterprise education too, on the pharma side, on insurance, and the biggest thing is the biggest piece of advice that I would give on having this conversation when you're trying to like have actionable outcomes is don't start with how it works, start with why it matters. Like, why are we talking about blockchain? We have broken trust relationships. And then let's talk about those. Why are they broken? What's the problem here? And then be like, okay, now if you still need me to explain to you how like consensus mechanisms work, we can spend an hour on that. Or we can just go put together an action plan on the use case that we just figured out. So
yeah, that's really good.
Yeah, just a quick question for Arman. While many problems in healthcare are blamed on technology, right, a large number are impacted to an equal or greater extent by healthcare regulations such as HIPAA. Does blockchain provide a unique capability to mitigate some of these regulatory hurdles, or will it face the same challenges in implementation and adoption?
I think I got the hardest question. HIPAA regulation has been what's keeping you down, and now you're telling me if this is going to help. Well, I can tell you that some aspects of this blockchain actually helps the issues. The implementation of some of the security protocols within utility is the holy grail, is it not, from a McKinsey's perspective? And Andy, you may agree with this, that that actually to be able to have the security and the data inside a coin as a utility and have it go throughout the chain, and the right people have the ability to, in fact, open up the information and act on it. You know, it's hard to believe that AWS, for example, has protocols that are HIPAA compliant, right? So, most of the healthcare companies and all of you who are working for them are probably using AWS for the transmission of the information. So, it's a great question. I think regulation will catch up with some of these things as the utility does improve. And I think it would be the holy grail, because the whole concept of blockchain is that it's distributed, and it's distributed over vast networks, and it's distributed for vast data. So I'm hoping that in fact, HIPAA will catch up with this, and this will catch up with privacy, the technology. I don't know if anybody else want to add to that or disagree with me.
Well, I would agree with you that, since you asked about, like, I guess McKesson's point of view, the core point of HIPAA is to protect the privacy of the patients and to protect their identity data, but it's also about portability. It's also about the ability to access and move that data and use it effectively. And we've focused a lot on making that data private and keeping it secure and putting it away. But it's actually really hard to get access to that data and to mobilize it. And I think blockchain is going to solve, or blockchain technology is going to really address that paradox between data availability and data privacy. And I think it's going to be really powerful. I mean, to Andy's point, the first big thing that blockchains are good at is auditing. So if you're a regulator, you should be loving this. That's, yeah, I don't know if you have something to add.
I think separate from blockchains that we should just think about as society is, you are uniquely identifiable using your home address and your work address. You don't need any other data to identify exactly who you are. And so if all of our data starts streaming off of our phones and our devices, and we're hooking up our EHR data and our pharma data, you can't de-identify this anymore. So I think a lot of the things that we have in HIPAA just aren't going to be possible. You really can't de-identify a lot of this data. So the question now means, what do we do if we can't de-identify? And so I don't have a ton of good answers there, but that's something I think we're going to have to start thinking about.
So I have a question just in general. So we're now hearing more about fraudulent, ICOs, and companies who haven't been able to fundraise from traditional venture capital sources are now raising tens to hundreds of millions of dollars through an ICO as maybe a backup or, maybe an alternative plan. How is this going to impact the nature of ICOs, the blockchain reputation, and the long-term success of moving to the blockchain?
So given that I'm sitting first and I'm a lawyer, may I take this question first? Sure. So a couple of points on this. There's always bad apples, and the few things that have happened is always going to happen, whether in any sort of a paradigm of fundraising. So, one of the issues that Bitcoin and Ethereum and Ripple have overcome is the fact that they were associated with drug dealers and, gambling and boozing and murder and all the other mayhem. So I think Bitcoin is here to stay, and Bitcoin, I mean cryptocurrencies, are here to stay. The fact that NASDAQ, you can now trade futures on these cryptocurrencies is a huge mark of approval, and once that happens, traditional investors will come around the table, and the individual investors, the moms and pops, are going to be looking that there is some modicum of reason about and potential risk that they're willing to take. So I think that the concept is going to be here to stay. The fact that there's always going to be some of these bad events that are going to transpire, they're going to transpire. They transpired, the Enron and the WorldCom and all this stuff went on in the Y2K area period, and public offerings are still going on, and they're roaring. So I'm not concerned about that. The regulation around ICOs is going to develop. Our firm has been in discussion with the SEC directly around some of these topics. The CFTC is very active in trying to see whether or not this is in fact a currency or similar to a currency, therefore a commodity. And either CFTC or SEC is going to eventually come around the table, but I don't think in the Trump era of regulation that is friendly to companies, any of this is going to stop, right? Even in an Obama, presidency, I don't think it would have stopped because Obama was very friendly to technology, right? So I don't think any of this stuff is going to stop. These things were a long time ago had some, problems associated with it, but it's the risk that is associated with nascent technologies. So that's my view.
Just a couple more questions here. So Emily, how is the blockchain solution different from what currently exists, and where does Change Healthcare hope to take it?
So in response to Change's, I guess, news today, the blockchain, and I did touch on this a little bit in my presentation, but the blockchain solution that we're offering is the outcome to our customers is not really different than what they have if they have the current relay assurance product set up. How it is different though is and I'm just gonna be like really vague about this because I literally am like 3 weeks into the job and I'm still figuring out how things work. But we have a network, like a FTP server network that claims are processed by, and then we have the software that claims are submitted and through which claims are approved, and the submission software used by providers and approval by payers. So whenever that claim is submitted, it kind of just goes into our black box, and we process everything and we run through the data, and you can use an API to call that and get a status check on your claim. The difference is you're having to really trust Change Healthcare. Like, you really have to trust that the data that we're giving you and the responses that we're giving you are what we say they are, because you have no other way of verifying anything about them other than having that agreement, that contract in place that we could be liable for if we breached. So the blockchain shifts some of that trust dynamic a little bit, where that the transaction that you're receiving when you query and ask for a sort of receipt essentially from our blockchain, that the transaction is mathematically secure, and that the data that you're requesting hasn't been tampered with because of the integrity check that's naturally built into the blockchain. So it really reduces, I think, a lot of tension between providers like IT providers like Change and our customers, because that certain aspects of our product are completely mathematically secure, and there's not even really a human there like looking at that and making sure that it's operating correctly. It's really all math-based. Now, today it would be very difficult to just go and independently analyze our whole blockchain, because it is a private solution. We control all of the nodes in our blockchain network right now. But the future and where we plan to take this is we want to see the potential that can be unlocked when infrastructure providers are sharing the network. And I think that because the value will really be unlocked if you can see the output of a transaction, knowing that the data that went into that output came from multiple different sources, and you don't need a third party to verify that. So we see at Change that a big value of what we're really providing to our customers is this value on top of this claims network. The network itself, people aren't like saying, hey, I need to buy your network. Nobody's saying that. They're saying, hey, I need like revenue cycle management software, and our network runs on the back end of that. And so sharing or distributing or changing the network to create a new application paradigm that can do things that we can't even think of today, I mean, that's totally on the table for a company like Change. And I think that what you can expect, at least from like me in the next few months as I come into this role, is to be looking to the community for ways in which to grow this network, because it as we've talked about, it really doesn't make sense to be an Internet of One, even if you are 2/3 of the healthcare transactions in the US. We really want to see the healthcare network be more of a utility network, and where our value-added services can run on top of that frictionlessly. We think that will really improve our business. So
So I think let's open it up to some of your questions. Yep.
Thank you. So thank you very much for all this information. It was really great. Just one question regarding like a more holistic question about the energy bill associated with blockchain, and how in terms of externalities, like there's obviously great things that gonna happen in terms of like saving a lot of money, but like how do you see us overcoming the energy hurdle, if there is any?
So for context, the consensus mechanism, which what's your name? Lemia, is referring to. It's in Bitcoin. The consensus mechanism is called proof of work, and the way that proof of work happens is it's computationally expensive and requires a lot of energy. It's kind of like solving a Sudoku puzzle, and then like everybody's competing, and it takes a while to solve it in one direction, but then once it's solved, everyone agrees on it, and you kind of like move to a bigger puzzle over time. A lot of the mining right now is consolidated in China because China has an artificially low energy price. So there's kind of two problems there. One is a lot of this is consuming a lot of energy, and two, it's actually quite centralized right now, even though people say that it's decentralized. So there's a really good article online from one of the core Bitcoin developers who actually left because Bitcoin's really not as decentralized as people would say because of this artificially low price, but has very high energy costs. People are working on other consensus mechanisms. Proof of stake should be coming out soon, and there's a number of other ones that may be less energy intensive. But right now, does anyone know the number? It's like it's painful. Can you say the whole stat?
It's just like the whole Bitcoin transactions.
So why are there so many cryptocurrencies? That is a wonderful question. Short answer, no. You don't need a currency for your blockchain application to be valuable. In fact, I would say that if your blockchain application requires a token of some kind, I would really take a look at that. Who's pitching that to you? Because maybe they have a financial incentive in there being a token for them. So I get pitched a lot of ideas that don't need tokens, but they have them for some reason. So, but to think about it like a revenue cycle management use case where we just want to process claims and eliminate reconciliation completely. You can do that with an append-only data structure that's secured by a blockchain network, where I'm a provider and I create a claim and it has this claim ID and I'm publishing it onto the blockchain. And then the insurance company, on a permissioned basis, can see that record, and then they can append it with their response. And the provider can respond. And what we get is this cryptographically sort of secure chain of, it's like a version control. And there's no tokens really being exchanged around unless you wanted to use like a token-based permissioning system for issuing certificates. But yeah, and that's an application that uses a blockchain between multiple parties, has no need for token. So your question is, where's the incentive? So that kind of gets back to a comment that I made earlier about making sure that we think a little bit separately about what incentivizes companies to validate transactions on a network and what incentivizes companies to use an application that runs on top of the network. Like for me, to mine Bitcoin out of my apartment, I would never do that. That's just wasting energy, and I'm not going to make any Bitcoins off of that. So not a good value proposition for me. But me using a Bitcoin wallet to exchange value with my boyfriend when we're trying to pay for Christmas presents, that makes sense. But my role in either of those scenarios is really, really different. And so when we think about incentive structures and tokens, one is the network level. How is the network incentivized to stay in tune? And the consensus mechanism is really what we're talking about. In Bitcoin, you get rewarded in Bitcoin tokens for mining blocks on the Bitcoin network. In models that don't use proof of work, there may not even be like a tokenized reward function for validating transactions. It depends on that network. But then the question of needing a token in an application is totally different. where you might need a token to incentivize two sides of the marketplace to use an application. Does that make sense? Sure. So his question was about the permanence of data. And in fact, in one of the slides I deleted, I talked about challenges facing blockchain, and this one is this culture of like, I need to delete mistakes that I make, and that's like a pretty ingrained in healthcare, and that's okay. So blockchains permanently record every transaction. So what happens if you make a mistake and you need to delete a transaction? So I'm kind of a permanence purist. I mean, when it comes to blockchain protocols, you can have protocols that allow for transactions to get deleted. Accenture is one company that's published some thoughts around that. And my thought is if you make a mistake and you publish it, then you shouldn't delete the fact that the mistake occurred. You should just append it to say, that was a mistake, this is the correct data. And so when you talk about adding blockchains to a blockchain ledger, I've used the word append only, which is meaning that I can only add on to something that I've created. I can't remove that it existed. So if I create an identity that says, this is Emily's cell phone, and then I realize, oh crap, that's not my cell phone, it's my laptop, then I can go back later and reference the same transaction and append it. And so if anyone's looking at that transaction, they would see like kind of two linked transactions. And that is truly how you would approach that from an application design perspective, and how you append transactions is determined completely by how your application communicates with a blockchain protocol. Most blockchain protocols don't have that type of logic baked in. It's not a feature, because blockchains and the validators of nodes on a blockchain network, they make no judgment about the quality or the accuracy of the data that's at the application level. They just are checking for a number of things, which is the digital signature on this transaction valid? Are all of the other outputs on this transaction valid according to this protocol? And so it's a highly like technical output that it's confirming. So you could put a bunch of nonsense into a transaction and then publish it and say, I'm claiming that this is my health record. And then anyone who requests that data from you and then sees that it's not a health record, they could see that, at the application level. The blockchain is going to allow the transaction to exist as long as it was structured appropriately. And so I think that really, in the healthcare space, it actually opens up a question around reputation. And I think that there's a big opportunity for that. And actually we talk about it a lot in the crypto world, and I don't know if this translates to the real world, but we'll see, is this idea of data credentialing, which is if I'm going to put a medical record and create a new ID for it and publish it to a blockchain, is there a service or a company who's willing to kind of accredit that data, accredit that transaction? So Change Healthcare could potentially provide a service like this that says, we know the identity of this user, we know the application that created this data, we're giving it a confidence score, and so any other application that wants to consume that data knows that it has, a known company's seal of approval. And I think that that's kind of how we'll deal with that in a permission to permissionless environment. But in terms of deleting data, if you get to a point where anyone can go back in time and change a transaction and change the context of that transaction, you really start to mess with the network itself. Like, part of the reason that you can trust the network is because it's not changing. So I've actually worked on a project like this with a European IT company who is looking to use blockchain to solve problems related to GDPR. So his question is, how do we deal with things like GDPR, which, if you guys are not familiar, GDPR is regulation from Europe that has a whole list of contingencies, one of which is the right to be forgotten, which is if I go to Facebook, I say, hey, Facebook, I'm Emily, you know me, I know you do, please delete all of my data, everything you have, and prove it to me that you did that. So Facebook has no way of dealing with this. Like, barely any company really knows how to go through their system and scrub the data. And there's even less sort of structure around knowing what data you have to delete and what data is kind of gray area and what data is okay to keep, and it's going to be a hairy mess. So non-compliance, by the way, is 4% of your global revenue. So if you are a company as big as Facebook, getting slapped with a GDPR fine is a really big deal. So, so to answer your question, how do we deal with deletion, right to deletion? So the GDPR regulators that I've met with and that my customers at my last company, GEM, were meeting with, the GDPR regulation doesn't exactly define the technical methods for dealing with this stuff. But what it says is that you have to demonstrate, your best effort to comply with that request. And so as a technical solution, we know that deleting data and that there would never be any record of that data existing is like impossible. And so how we represent identity data on a blockchain is really important because it can't be deleted. And so the best practice for any blockchain application, and I don't care if it's a private ledger, completely private, and you don't expect any other company to ever touch it, or if it's totally public, is to not put identifiable data in the metadata of a blockchain transaction. So you don't want it to say, here's the document ID, here's the sender, here's the recipient, and in the metadata, it's got your name, address, birthday, social security number, because that's the metadata of the blockchain transaction. It cannot be deleted. And so, there might be methods that change over time that strip blockchain transactions of metadata and just keep the top layer and like try to pack it all in, but that doesn't, I don't know, I don't agree with any of that. So, so my point is that you aren't going to be able to delete the existence of these records, but you can design it in such a way where the data that's put onto the blockchain network isn't covered by GDPR, the GDPR, right.